What is up, everybody? Happy Thanksgiving. I hope y'all are about to get ready, about to go have fun with your families if you're celebrating. Today's video is going to be over market structure shift. Market structure shift is very, very important to implement into your day trading if you want to start seeing your win percentage go up. The reason I like market structure shift is because it's one of those like confirmation strategies that I'm able to see and then really get conviction within my trade. In this video, I am going to tell you exactly what a market structure shift is and how you can use it in the market to become a profitable trader. All right, now we are here on the slide. What is a market structure shift? This will be the definition kind of overview look at market structure shift. So a market structure shift is where buying or selling pressure is reversed. When price moves in the market, price either is moving in an uptrend, which is a buying trend, or a downtrend, which is a selling trend. And when price is reversed from a buying trend to a selling trend, a market structure shift happens. Now, what a market structure shift actually looks like in the market, a market structure shift happens when a high or low of the last manipulation leg gets a candle closure above or below the price. This is a lot better shown in the charts. For right now, I really want you to think of last manipulation leg because that's the most important part about market structure shift. And then we have a bullish market structure shift to the upside, and a bearish market structure shift is to the downside, as you could probably imagine. And then if a market structure shift is formed, then price is likely to reverse. So we can locate and mark out a market structure shift and have the conviction that price is going to go down now because a market structure shift happened. All right, now that we're on the line chart here, I'm going to better explain what the components of a market structure shift are and what they look like. And hopefully by explaining it on the line graph, y'all can better understand it whenever it's time to look at it on the candlestick chart. First off, we have to understand that we are in a obvious downtrend, correct? We are making lower lows and lower highs. Lower high, lower low, lower high, lower low. So we're in an obvious downtrend. And so what a market structure shift is if you remember from earlier, I said that it's a reversal of the trend. The trend is going down, right? So the reversal would be to the upside. How we can find the market structure shift is there's two things. First off, this manipulation leg, and then second off, a candle closure above the high. So this is a bullish example. And so what it would look like for a bullish example is that we get a manipulation of a low, right? So this is our low that we manipulate. And then see after we manipulate this low, how there's a green box that I drew here. This would be our manipulation leg. The reason why is because we manipulated sell-side liquidity here. And this is important because we're going to get into a nuance that you have to be careful of. And it's important to remember to look to the left and make sure that you swept liquidity, and then that would be our manipulation leg. And so for a bullish example, you would want to look at the high of this manipulation leg, draw out your little line right here, and then wait for candle or price to close above this level. There's still one more bullish example that I want to go over because this nuance can actually make or break your trading because you'll be taking a lot of losses. We see here that this would be our manipulation leg because we swept out sell side. And the thing here is that our market structure shift would be when candle closes right here. But what I see is that people call this a break of structure, and what this means is that they think that because it manipulated the most recent high that it broke structure, which I understand that that could be the case, but and like you saw in the other one, it was the most recent high that got taken out and formed the market structure shift. But in this example, you can see that we don't sweep out any liquidity. This manipulation leg has not been closed above. And that's the difference between a break of structure and a market structure shift, is that the market structure shift is more reliant because price has to has to manipulate even more to get back up into this range. If I used to trade break a structure and I just took too many losses because I would enter too early because I would get a confirmation signal and then enter and then it would hit my stop loss when it really should have not been even entering in the first place. But with the market structure shift, it helps a lot with the confirmation and also just my overall confidence in the trade. All right, now on to the bearish example. This will be a lot quicker because it's pretty much the same thing as the bullish example, just flipped. So you can see here we get a manipulation of the buy side liquidity. Then this would be our manipulation leg. For the bearish example, we look down at the low of the manipulation leg, put our line there, wait for a candle closure, and then bam, there you got a market structure shift. Now to that nuance on the market structure shift with the break of structure, we see here that we get the manipulation leg right here because we swept out this buy side liquidity. We look at the low, we put our market structure shift here. That's what we do, right? That's what we do. Or you can do it the other way if you want to, but this is the way I'm going to be teaching it. This is the way I trade. So I'm just gonna say it, put it like this because I'm teaching you this way. But people will see this breaker structure right here. It is not the last low because this is not the manipulation leg. This right here is not the manipulation leg. Why? Because we didn't sweep out buy side liquidity. And you could see here, just as a final like exit piece with this, like you can see that this buy side liquidity never gets taken out, right? Never gets taken out. Nothing comes up, and so that's why this is the last manipulation leg. All right, we're going to get straight into a chart example now. Hopefully y'all better understand it. We're going to do a bearish example here of a market structure shift. So we're looking over this way, right? This is an obvious uptrend, right? We're obviously going up here. What do we see at this top? We see a low, right? Where first we mark out the buy side liquidity. This buy side gets taken, correct? So now this would mean our manipulation leg would be right here, correct? Here's our manipulation leg because it's the low to the high of this range. I hope y'all can understand this. This is a low because it's a down up move. This is a high because it's an up down move. So now that we have that going, we are looking for what? The bottom of this low to be taken out. Let's put market structure shift right here. Boom. We have now the bottom of this low that we're waiting to be taken out. And we could see here, and I say this is a good example because we could see that price came but did not close, right? So this would not be the market structure shift right here because it just wicked through. It has to be a full candle closure like this, and then you can see that we got a retrace and then we started to go down. But that was the main part that I wanted to show you is that it's the candle closure that does the market structure shift, and not this, but this, because it's the candle closure past this level to the downside. And so, yeah, that's pretty much it for the bearish example. All right, now for our bullish example of a market structure shift, we can see here that what do we look for? We look for sell side to get manipulated, which would be right here. We have our sell side getting manipulated, right? And then we look for the high of our manipulation leg, which this would be our manipulation leg right here. Right? So the high would be right here. We mark out the high. Boom. It's that simple. It's that simple. Market structure shift. We see that we never come back and take out this low. This low is protected, and then we come all the way up, all the way back up. That will wrap up this video. Thank you for watching. Again, like I was saying, market structure shift is a very, very important confluence to learn and be able to recognize because honestly, I don't take a trade unless I see a market structure shift because that confirmation tool really helps eliminate my losers and make my winners even more probable. If you found anything new in this video that you liked, please consider giving me a like and subscribe, and go to my other links located in my channel description, like my TikTok and Instagram and my Discord. I would greatly appreciate it if you guys could go show love to those. Helps me out a lot. Thank you again. Enjoy your Thanksgiving and have a good day.